Good morning and welcome to Bazaar Morning Call. I am Anuj, with me Prashant and Sonia. We of course start the week with the sad news of yesterday when Cyrus Mistry was killed in a road accident at a fairly young age. So pretty sort of sad way to start the week with.
And absolutely tragic, right? Shocking, unbelievable. I mean, I heard the news and I said, you just don't think that something like this could happen. Extremely.
It's unfortunate, right? That's the only way to put it. Yeah. And also, of course, condolences to Cyrus Mistry's entire family and friends. But just spare a thought also for the other passengers in the car. Renowned gynecologist Anaita Pandole and her husband, Darius Pandole, were in the front seat. Luckily, they were belted. And, it speaks a lot about the car safety, road safety as well, right? I mean, Anuj, when was the last time you wore a seat belt when you were sitting in the rear seat? So I think there are too many things that just put together and made this a really unfortunate incident. And we hope that Anaita and her husband recover because they are critical at the moment. Yeah. But Jahangir Pandole and Cyrus Mistry were killed.
Yes, so sad news, of course. To wake up to, I mean, as Prashant said, for half an hour or so, you didn't want to believe, that it happened. But then, that's life. It can be like this. But now let's talk about the market, and we are starting, of course, a brand new week. And what's important and interesting is what happened to the US market on Friday, because for the first hour after the jobs data, we were all watching out for the jobs data. The Dow was up 340 points. It ended down 340 points. But what was spoken about when, at least, at that time I was awake, is that it was Goldilocks, the US jobs data, almost the best case scenario for the equities, which is the jobs gains are there, but the wage rate is slowing down, which perhaps means that while the 75 basis point rate hike may still happen, pace of rate hikes might be slower. And that is exactly what you describe as Goldilocks scenario for the equities. However, must point out that dollar index is still stubbornly close to 110. There it is. And Brent crude is at 95. So lots of moving pieces. Let's see which way things move. SGX Nifty is indicating that we'll have a flat start with a downward bias, and then we'll take it from there.
Okay, and of course we have to keep in mind that the US markets are shut today for Labor Day, so things could go either way, right? I mean, nobody knows what to expect from the US markets. The data, the ticker hasn't been good, so the Dow is down in the red. The Nasdaq has been down for 6 straight days now. And even if you look at the data that came out, right, the US added 315,000 jobs, but the expectation was about 310,000. So it was largely in line with expectations, but not as good as what we saw in the month of July. More importantly, the unemployment rate has also risen to about 3.7%. So a lot of people are, as we said, calling it perhaps a Goldilocks scenario. Not too good, not too bad. And maybe the rate hike trajectory could continue. The last major economic report is the August CPI data that comes out on the 13th of September. That's before the FOMC meeting. So let's see how that shapes up. The big question that we're asking is this 20-day moving average, right, which is about 17,598. Is that something that the index can get back above? For now, it's below it. So just somewhere gravitating around the 20-day moving average. But give and take everything, is that a level that could be breached?
Sonia, the issue is price action is clearly indicating that our market is strong. Yeah. It has been the best performing global market last week, and ever since Jackson Hole, it has been the case. And the basic texture of the market is to buy the dip. I mean, you made more money by buying the dip than selling the rally. So that is the market's message. The 20-day moving average, I mean, I look at the exponential moving average because of the volatility. So that gives more importance to the recent price move. And in that sense, 17,445 for me becomes that line in sand on closing basis. If you're closing above that, the market's texture is still buy on dips. The US market is closed tomorrow. What that means is tomorrow morning, you don't really wake up to really bad cues. So in that sense, the last hour could really be interesting, and the bulls may just want to try their hand at long positions this afternoon. The bank Nifty is very strong, and I think that is something which is really helping the market despite the pressure that's coming in from other stocks like IT, for example. Bank Nifty really is the one which is helping. Now, the other point is, and we discussed this in Editors Roundtable as well, FI short positioning. The price action is not too bad, but FI somehow are adding shorts. In fact, we are almost getting to a zone in which, I mean, if you look at Friday, for example, there was unwinding of 10,000 longs and there was a build-up of 14,000 shorts. It didn't appear that in the price action. I mean, normally on days like this, the market should be down a lot. The market was not, and still there's so much, short build-up. The FI short position now, net short position on index futures now stands at 85,000 contracts, and at 81% short. The question you ask yourself is, why are these people short, and what if these shorts don't get followed through? Because shorts normally help markets if market gets a trigger to move on the positive side. Where will that trigger come from? I don't know. But the market at least is so short that any amount of, just a bit of positivity can take the market higher. This theory is out the window if the Nifty starts to close below 17,180. I mean 17,230 to 40, but let's give it another 50 points, 17,180 or thereabout. But the basic impulse remains to buy the dip, at least here in India. That's my sense. But let's see if things change or not. Prashant, what do you have for us?
I mean, outperformance, right? Massive outperformance compared to very tepid, poor global cues is what we have. So I'll just start with, two figures. One is what happened last week. And this is, I mean, the Nifty as compared to the S&P 500. And then what markets have done, both markets have done since Jackson Hole. Last week, S&P was down 3.25%. Nifty was down 0.1%. Since Jackson Hole, the S&P is down 6.5%. Guess what? The Nifty is up 17 points. It's unchanged, practically unchanged. So it's just, I mean, amazing that the market here is holding on very, very strongly. The question is, if markets in the US, of course, are selling off because of two basic reasons. One is interest rate increases and quantitative tightening, which is now at a pace of $100 billion every month starting September. That's balance sheet contraction, central bank liquidity going out of the system by small bits, larger bits now starting September. Will that impact emerging markets, etc., as well at some point in time? We'll see. We'll find out. U.S. markets are closed. That's, I mean, if you're trading, that makes some difference because, as Anuj said, you don't wake up to cues one way or the other. You kind of pick up where you left off, unless, of course, something blows out in Europe, and it's possible. U.S. August jobs report avoided the most hawkish outcome. I mean, the headline number was in line with expectations, maybe even better, but average hourly earnings and the unemployment rate both ticked lower. So that provided some cushion. Markets rallied. I mean, actually, the U.S. market was up almost 1.5% immediately after. The dollar sold off, but both reversed. And the market pricing of what the Fed will do did not budge much despite this. So there is a 75 basis point hike, which is still expected from the Fed on the 21st of September. There is one more data cue to go before then and now, which is the CPI number in the US on the 13th, which is next week, not this one, the week after. So I think, that's important, and maybe that will change things around. But for now, despite what we heard and saw from the jobs report, it's still 75 basis point, which the market is expecting. Oil's, behaving at about $92, $93, but there's an OPEC Plus meeting today. Decision is expected by about, the first we will hear from them is by about 4:35 our time. If there is a cut, I think expect prices to react. It's fallen $10 on hopes that nothing comes. There is no cut. But if they decide to act like the Saudi Arabia energy ministers indicated a week and a half back, prices could move, and oil is always important for markets here. And staying on energy, the Nord Stream pipeline, which supplies natural gas from Russia to Europe, well, that's basically not coming back on stream. There was maintenance, which ended on Saturday, and, the Russian side basically saying that we need to fix certain things, and only then it'll come back on. So this is important as Europe goes into the winter season. There are those who say that the reservoirs, gas reservoirs, etc., are full, but that can last apparently 2 months worth of, utilization. But what after that if the pipeline does not come back on? So a lot of sort of anxiety and markets, of course, are reacting. The most obvious way markets reacting is that European stock futures are down quite sharply, at least that it was in the morning. And the Euro USD, it's broken parity once again. So we'll see where things go. But energy, especially in the European part of the world, very much in focus.
It's not just in Europe. You should see what's happening in the US. I was reading a report, and we'll take the story forward, actually. California, they're predicting huge energy deficits. So now they are calling for power outages, right? They're telling electric vehicle owners, they're prohibiting them from charging their vehicles because they're saying that it's going to result in a big power deficit. and a power outage. And this is the same state that about 6 months ago were encouraging people to buy EVs.
It pretty much led this entire
Yes.
EV kind of revolution, right?
Absolutely. So that's what's happening, like, not just in Europe, I mean, in the US as well. This is a story that's playing out. All right.